Awesome. So yeah, we're going to go ahead and get started. Hopefully anyone else will just trickle in. But hi, everyone. Welcome to our PACU Q2 2023 CPC report webinar. So just as some background, this report combines data from PACU and Helium 10, offering a comprehensive view of advertising on a large scale. So the information that we're going to go over today is from thousands of advertisers across various brand sizes, product categories. So it's one of the most extensive reports of its kind in this industry. So we'll have this report today, and then our actual physical report came out yesterday. So if you don't have that, please feel free to download it today. Again, you can sign up and we can provide that info at the end. So again, just a reminder, this webinar is being recorded, so it'll also be sent out later today as well. So if you have any questions, please feel free to add them in the Q&A box, and we'll get to them at the end of the presentation. Perfect. So quick intros. I'm Gabby Clarke. I'm an account director here on our managed service team at PACU. I've been here for about a year and a half. I cover pretty much CPG categories, fitness, as well as home furnishings. And then, yeah, Jocelyn, I'll pass it to you.
I'm Jocelyn Jeffries. I've also been at PACU for about a year and a half. I'm a senior account manager. Most of my clients are the enterprise around CPG, household supplies. So excited to talk to you guys today.
Perfect. So here's a brief view of our agenda. So we'll kick off taking a look at Q2 performance within the CPC report and category trends, and then we'll take a deep dive looking into specifically Amazon, Walmart, and Instacart. And then at the end, we'll take some key takeaways from Q2 as well as Prime Day, considering that happened last week. So a lot of good info here, and we're excited to share it with you guys. Perfect. And then quickly about PACU, just, if you don't know what PACU is or haven't utilized it yet, so PACU is the industry's first commerce acceleration platform. So we're able to integrate operations, retail media, and measurement. A lot of our use cases has been utilizing it for advertising, but we've really begun to expand into commerce as well. So again, if any questions there, please let us know. We're happy to answer them. Perfect. And then just a little bit more about PACU. So again, just a quick visual. It's a commerce acceleration platform that empowers businesses to discover the most impactful opportunities, activate sales growth, and streamline data operations. So we really are able to be integrated within multiple retailers and really focus on integrating multiple data points within commerce, advertising, et cetera, to really give you holistic insights, recommendations, et cetera. Perfect. So with that, we can jump into Q2 performance trends. Awesome. So first, we're looking at quarter-over-quarter data here. Again, this is an aggregate of our internal data with clients across categories. This will vary by specific categories and will fluctuate, but this is a holistic view across the data that we have capabilities and insight into. So something to consider for these benchmarks and how to use them. This is an aggregate, so again, trends will be different. And it's always good to compare these trends to versus the average. So if your CPCs are much higher, you're in a much more competitive space and area. Again, it just really varies by your categories and how competitive they could be. So some call outs here within Amazon specifically. Amazon's advertising landscape has seen a decrease in CPCs on average, a moderate increase in overall ad spend, and a record ROAS specifically for sponsored products since pre-pandemic levels. We'll get a little bit more particular here in the next coming slides. However, interesting to see these metrics since the pre-pandemic. Walmart specifically, Walmart Connect continues to make strides refining their advertising platform. They're continuously coming out with new capabilities, a lot more coming next year as well. But we're definitely seeing some overall quarter over quarter, we do see an increase in click-through rate primarily. However, when we look at the year-over-year performance, we'll definitely see more substantial changes with those capabilities implemented this year. So a consideration for Q2 as well within Walmart is that, again, what they released at the end of Q1, making that sponsored video beta more expansive, including more advertisers, definitely has an impact here. So hopefully as that continues, and again, this is a very similar offering to Amazon sponsored brand video. So again, continuing to push and expand their, offerings, ad sets, et cetera, and capabilities. So interested to see how that continues to grow going into next year as well. And then for Instacart, overall, quarter over quarter, we have seen stable CPCs and a rising ROAS year over year. However, looking at it quarter over quarter, we are starting to see increased competition, making those CPCs a little bit more premium and affecting our overall ROAS metrics here. So definitely a continued trend that we've seen, just increased competition within Instacart.
Awesome. So then looking at year over year, it's a bit different of a landscape. Amazon sponsored product actually saw lower CPCs, which is not typically the case for Amazon. Higher engagement though, significantly, a 35% increase in click-through rate and a 7% increase in daily spend. So as spend continues to, as Amazon continues to become more saturated, to cost a lot more to get involved and to advertise on Amazon. So you're really fighting for the improvement in engagement. Refining your targeting strategies, refining your content is going to make those click-through rates much more effective and make your advertising much more effective, with Amazon being the most mature of these three platforms. Walmart is going to be the most interesting. Obviously, last year, Q2 of 2022 is when they made the most significant changes to their algorithm. So they changed the bid auction type from a first price to a second price auction. And then they also made changes to the relevancy algorithm. So you're going to see significant jumps in click-through rate, 124% increase year over year, which is outstanding. CPCs decreased 18%. So the cost to advertise certainly went down quite significantly after those improvements. That's really coming from the first price shift to the second price. It's you not having to pay as aggressively and bid as aggressively as you had in the first price auction. So there's quite a lot of cost savings happening on Walmart sponsored ad right now. And then you can see the 40% increase in ROAS is outstanding. The increase in average daily spend, we've had a lot of clients really lean into Walmart, given all of these improvements they're seeing, improvements in cost, improvements in return, improvements in engagement overall. A lot of our clients are shifting budget into Walmart as it becomes more effective. I think it was kind of a tough retailer to crack for a while. And now with these changes year over year, we're seeing a full year of improvement across a lot of clients. And so we're seeing a lot of clients really lean into Walmart as a viable retailer for them, when it previously had been a little tough to compete. And Instacart, we kind of see the opposite, an 8% decrease in daily spend. Return has improved year over year, but if we just saw quarter over quarter is declining. So costs are rising in general on Instacart. So we're seeing a lot of retailers or brands kind of reevaluate how they're investing in Instacart. It is becoming more costly to compete, given that it's become a more mature platform, certainly than it was back in 2020, when Instacart was the kind of rage and everyone was leaning in early. We're seeing it become more of a mature retailer. And so that's going to shift how return and costs affect how brands are investing in Instacart. We can move on to the benchmarks.
Perfect. So jumping in for benchmarks, starting with Amazon. So key takeaway here is Amazon really saw cost efficiencies within CPCs and increased ad spend this quarter. So this resulted and year over year, resulting in a stronger ROAS, reaching again its highest level since the beginning of the pandemic. So overall, we're really seeing that improvement from a cost efficiency perspective within CPCs across both sponsored products and sponsored brands. Sponsored brands does include video within this breakdown. So again, we're seeing really strong cost efficiencies, as well as an overall trend in improved conversion rates the past 2 quarters. Previously, we were seeing a steady decline in conversion rate, but it seems to tick back up starting in Q1 and going into Q2 as well, which is really great to see. So looking specifically, Amazon sponsored products average cost per click declined 4% year over year. Sponsored brand CPCs declined about 6.7% year over year. The current average CPC for Amazon sponsored products is about $1.21. Again, this can greatly vary based off the category that you're in. So just take this, again, this is a holistic view. So just comparing to what category that you are in, you may see even more cost-effective CPCs or vice versa. Generally, the ad spend within Amazon specifically has increased about 7% year over year, while sponsored brands actually have seen a slight decline, 6.2% year over year. I find this pretty interesting considering all of the latest betas and new features that have been coming out within Amazon have been really focused on sponsored brands driving to brand stores. So curious to see if that changes within this next quarter in Q3, especially with the push of Prime Day. Outside of that, that is pretty much, the biggest call out we wanted to make here too, again, is what I mentioned about conversion rate. So continuing to see that increase in overall metric. So hopefully that continues as well as we continue into Q3 and within Prime Day as well.
For Walmart, similar talking points as we've mentioned before. Click-through rate has steadily increased quarter over quarter. So you can see when those changes were made at Q2 2022, we started at a 0.42% click-through rate. We're all the way up to a 9.94%. So the engagement and interaction within Walmart Connect has significantly improved year over year, quarter over quarter, every single quarter for the last 5 quarters. Cost per click, as you can see, has continued to decrease, down 18% year over year. And of course, brand spend has really improved. So Walmart Connect made a lot of improvements really with the goal of increasing the effectiveness and efficiency of its advertising. There was a lot of feedback from brands and advertisers who were early adopters of the difference in Walmart Connect versus Amazon, Instacart. So they've really made changes with the intention of improving efficiency and effectiveness, which is what we're seeing in the metrics themselves. So with return up 40% and ad spend only increasing 15%, you can really see that the money that brands are investing in Walmart is going much farther, and you're able to stretch, the same budgets that you had to a significantly higher degree of sales. Given that most clients have either stayed with that current budget and grown sales significantly, or they've invested even further in Walmart, given the improved performance they're seeing, and again, the maturity of Amazon as a whole, and then the increase in maturity of Instacart as a retailer.
Perfect. So going into Instacart, so overall, Instacart continues to see strong advertiser presence, especially from a quarter over quarter perspective, increasing CPCs. However, year over year, essentially remaining flat. CPCs have been pretty consistent over the past few quarters. And something interesting here is within 2022, saw lower ROAS than what we're seeing in the past few quarters. It did decline this quarter compared to Q1. However, these patterns seem to align with seasonal spikes ahead of, holiday, summer holiday and winter holiday peaks. So where attention and competition likely increase from a food and household category, brands continue to monitor which products follow a similar pattern. So really leaning into seasonality within Instacart, I think it's essential really when you're thinking about, flighting, budgeting, where you really want to lean in during those peak moments that are relevant for your specific advertiser. So generally, overall, average CPC on Instacart was nearly flat, increasing just 1% in Q2 to 91 cents. Interested to see if this continues to rise with increased competition. But overall, really seeing continued strong performance within Instacart as well.
Awesome. So we'll look at a couple specific categories in the report. There are a few of the largest categories broken out. As Gabby mentioned, those previous metrics were in aggregate. We're looking at beauty and personal care specifically here, quarter over quarter, year over year. So at the top, you can see return on ad spend is declining. It's followed the same trend roughly in 2021 as it is in 2023. But you can see there is an increase in competition within the beauty and personal care space. Average daily spend has increased significantly in this year so far, and it's on an upward trend, kind of that summer spike that we're seeing in June. But the cost to, the daily spend is increasing is not proportional to the return that's increasing. So it is becoming more competitive. It's always been a competitive category. Beauty and personal care is one of the largest in the industry, but it is becoming harder to capture attention and to gain market share. So beauty and personal care is definitely heating up. Conversion rate has improved since the start of the year. It was essentially at an all-time low in the last 3 years. In the first few months, that is going to be the most competitive time. If you're in, new year, new you kind of themes with beauty and personal care in January and February and March in Q1, that is one of the most competitive times for the year, along with obviously Black Friday, Cyber Monday. But it is making some improvements. We are seeing some year-over-year improvements, certainly in the last few months, again, during the summer period. But cost per clicks were at a low at the start of the year, which is interesting given the level of spend and competition, but they are on the rise again during that summer period. And then the next category is going to be pet supplies, which is another hotly competitive category, and it always typically has been. Return on ad spend has fluctuated quite a bit so far this year, at a high and then really kind of at a low in the last quarter. So quarter over quarter has been significantly different as far as return on ad spend so far this year. Brand daily spend is at an all-time high in the last quarter, which is where we're seeing some of those decreases in return, is really a pretty significant increase in daily spend and competition. CPCs are also up in this quarter. We saw this similarly in 2021, an opposite trend in 2022, but it is incredibly competitive during April, May, and June this year. And so we are seeing quite a lot of activity around the pet supply space. Conversion rates very low in the first quarter of this year, and then improving steadily. So this really shows the need to, again, refine your content and refine your targeting so that every dollar you do spend is much more effective, given the level of competition in, again, beauty and personal care and pet supplies. Refining your targeting and refining your efforts to be as efficient and as effective as possible is where you're going to see improvements for yourself in your return and your daily spend.
Perfect. So going into key takeaways here. So overall, a major trend that we're seeing, that we're continuing to see from Q1, and this definitely falls into what we just had last week with all the deal day and events within Prime Day, is continuing to shift towards financial conservatism. So brands and consumers, have exhibited more frugal spending behavior due to rising inflation in early 2023. So leading to tighter advertising budgets. So even more so going into Q3 and holiday, really focusing on events where consumers are going to really be highly engaged. They're looking for discounts, they're looking for deals. So especially more so in kind of those everyday household items versus big ticketed items. That while those are still booming, I think more of presence and really seeing that consumers are leaning in and looking for savings, discounts wherever they can, beyond just big ticketed, TV items, things like that. Which kind of goes into our next bullet as well, just with more retailers expanding within deals and events within Amazon Prime Day to compete. There's definitely more opportunity that we've seen, especially in the past few weeks, with Walmart, Target, even smaller retailers really leaning in and trying to essentially take those consumers away from Amazon and having them purchase within their specific retailers. So Amazon, regardless of that, still had the highest day of sales in their history on the first day of this year's Prime Day. So even more so in data validation, that consumers are really continuing and waiting, looking for discounts for big purchases, even household items or more kind of everyday items as well, just really trying to find a deal wherever they can. And then jumping into specific retailers that we just went over. So again, key takeaway here, Amazon continuing to improve their conversion rate trends. So very curious to see the continued trend into Q3, even outside of Prime Day, noting that they're trying to improve, it seems like they're trying to improve performance, ad placements, et cetera, to really increase that engagement and overall consumption, and ultimately driving conversion. Seems like they've been starting to see an improvement over the past few quarters. Walmart's accelerated growth, we brushed on this a few times, but just knowing how quickly Walmart is continuing to really expand their offerings and within their platforms, becoming very head-to-head with Amazon. We're continuing to see that again with sponsored video, variant bidding that was released earlier this year, and even more interesting things to come to increase their capabilities, very similar to Amazon. So very curious to see how that works in the next few quarters as well into early next year, if there will be anything new released. And then something to keep an eye on within Instacart is just that rising competition that myself and Jocelyn mentioned. While we are seeing pretty consistent CPCs consistently over the past few quarters, we are starting to see a slight increase there. So just noting that that space is becoming more crowded, especially from its acceleration within 2020. So interested to see how that continues within the next few quarters. So awesome. Perfect. I know we have a few questions in the Q&A, but just a reminder as well, we have a more robust report for what we just went over today. So if you haven't downloaded already, a lot of great info and insights there that we didn't even scratch the surface on today. So if you haven't downloaded it, be sure to download it today or this week, since it was just released yesterday. Perfect. So just a few questions around slides. So all the slides, especially within the Q2 category trends that Jocelyn went over, those are inclusive of Instacart, Walmart, and Amazon. So those trends that you're seeing, those are from those three retailers.
We have one question. I know that ROAS can vary between retailers. Do you have any information that outlines how ROAS is calculated between the retailers that we're covering here? So it's the same calculation as far as spend divided by sales or sales divided by spend. However you view that ROAS or ACOS. There are obviously different pieces that go into for across retailers. Amazon is going to be either the vendor price or the seller price divided by your ad spend. Same with Walmart. Instacart has, their various fees incorporated into that. So Instacart return is somewhat inflated from like a true cost to brand, but that's going to be the same across Amazon, Walmart, and Instacart, given each retailer has their own fees and COGS and whatnot that go into that calculation, but return itself is the same, sales divided by spend, no matter what, across all retailers. Again, taking into consideration what those kind of back end costs are for you selling on each of those retailers. Some other questions. Was Instacart data for US? If yes, can you please share the same for Canada or advise where we can get it from? This report is just, the CPC report is just for the US. So that data is just US centric. There's possibility of expanding this report to Canada or Europe as needed, but the current report in its state is US only.
Perfect. And then just quick here, so this deck will be shared after the call as well as the recording. So we'll definitely send that out afterwards, just to make sure that you have all the details needed. And again, within our PACU website, within the CPC report. I think Amanda's answering this, but you can also download the specific report as well for more deeper insights, details, and kind of just more holistic views of the overall CPC report.
Let's see, any insights on food? I'd have to check to see if that's one of the categories broken out specifically in the report. That's going to be very different, obviously, from CPG, household supply, beauty and personal care, etc. So that may be one of the categories broken out. We don't break out every single category in the report, largely just the main ones: electronics, household supplies, etc. If you download the report and it's not in there, let us know if you have any follow-ups and we can dig into that. But we do have most of the largest categories broken out in the report itself. And then last question we have here that we've covered, those slides for the categories were across Amazon, Walmart, and Instacart. So again, that was an aggregate across all retailers, while the first few slides that we went through quarter over quarter and year over year were broken out by retailers specifically. Awesome. Any other questions before we wrap it up?
Awesome.
Good.
Awesome. Great. Well, thank you guys so much for joining again. We'll be sending the details out. It looks like there's a 404 error in page, just FYI. So we'll send the correct URL link so you guys can also download the report as well. But again, appreciate everyone's time today. I know we went through that very quickly, but any questions, feel free to reach out to myself or Jocelyn in the emails below.